Matt Orton, Chief Market Strategist at Raymond James, is with us. Matt, good morning. Great to have you in. So, when we talk about foreign money and competition for India, it's been South Korea, it's been China, it's been Taiwan, and clearly Japan's not going out of the window. I was just looking at the past gains when the tariffs were announced in April. They were among the first countries to get that deal done, and the market's just been skyrocketing. So do you see these patterns changing in the near future at all? We know you like the Indian market, but the money's still been going out, foreign money.
Hey, good morning, Surabhi. And yeah, you're right. It's been a really strong market for a lot of the emerging markets. International developed markets, including Japan, just continue to push higher. And I'm optimistic about it. I have exposure to Japan. I've luckily recently increased my overweight prior to a lot of this news coming out with the LDP. But I think the bigger picture is really, really important here. It's that a lot of these markets are pushing higher because either they have exposure to the artificial intelligence theme. That's really been the critical driver of South Korea, of Taiwan, of China, even is the enthusiasm around artificial intelligence. Japan, on the other hand, has some of the best corporate earnings revisions across all markets in the world, coupled with stronger share buybacks, plus optimism around trade, and now hopefully a lot more fiscal spending that can support the market. So there's reasons that investors have been going there. I think India has fallen short just because of lackluster earnings coupled with higher valuations. But the Indian market's been pretty bifurcated. There's been a lot of very strong winners across the Indian markets for investors who do their homework, and it's been decorrelated from a lot of the rest of the world. So I like India as a risk management tool across my emerging market exposure. And for those investors who are willing to invest in high quality businesses that continue to compound earnings, India's been pretty good. And I think if earnings season's positive coming up, I think you start to see a change with respect to foreign investor flows.
Matt, morning. With regards to what you said, right, the AI theme and money going into this AI thing globally, just a quick word, this latest, if anything, and it's quite remarkable, if you look at the investment commitments which were made for the next 4 years by OpenAI, right? And you kind of sort of try and look through where all this money, $500 billion or something, right? So almost all of it is essentially going to a large US, Japanese, Korean, Samsung, for example, etc., right? It's a very large sum of money, and this is over the next 4 years. So, sitting here, you kind of sort of feel a little, it's a little underwhelming. In that sense, right? You got this huge capex super cycle build out in terms of AI, which is happening, and it's accelerating, if anything, this OpenAI order. So what's your sense? How do you think about it?
When I look at artificial intelligence capex, Prashant, I think it's definitely the lion's share has been going to U.S. companies or the semiconductor exposed companies in Korea, Taiwan, like you mentioned. But there's going to be bottlenecks that start to come up. As I look forward to realizing a lot of the gains that are going to be associated with AI, a huge amount of those dollars are going into data center development. That's why electronic equipment companies have done so well in the US. That's why data center construction companies, connectivity, all of that chain has created a very virtuous cycle. But there's not enough power that exists in the US. There's going to be regulatory problems that come up. So where I've increasingly been focused is where else can data centers be constructed that might not have such a big demand or imprint on power. That's why I think looking to Europe could be interesting as you see fiscal efforts start to come to fruition in countries like Germany. Maybe you're going to start to see a pickup with respect to AI data center demand, and you have a lot of the companies producing components located over in Europe. I think the same thing could potentially play out in a country like India that geopolitically is still very strategically important for the U.S., still friendly to the U.S., and also has exposure to power, the ability to construct more power with less regulation. So I think that's something that's underappreciated by investors. And there's also companies in India that are starting to better integrate AI in the software layer that I think ultimately is going to be the long-term investment theme of artificial intelligence that could provide a lot of enthusiasm, say, over the next 3 to 5+ years. So it's all about picking your spots and how you want to be positioned and how long-term you think about this sort of trade.
All right. Hi, Matt. Good to see you. And as always, give us, a couple of stocks then. How have you rejigged your portfolio in the past? I think you were positive on the likes of Interglobe. Mahindra & Mahindra is a stock as well that you have liked. I think ICICI Bank, you've taken some money off the table. So tell us what has been the recent rejig that you've done with regard to the India-based portfolio.
Absolutely. So I've actually started to add back a little exposure to ICICI heading into earnings season. I think the potential for retail loan growth might be a little bit underappreciated by the market. And the stock looks pretty cheap to me. So I like it. It's a solid execution management team. Building on this idea of artificial intelligence, there's names like Paytm that I'm looking at adding potentially some more exposure to my position if we see a little bit more weakness, because again, they're powered by integrating AI into their ability to convert active users and build a better integrated payment system. And a name that I've recently added to the portfolio is Apple3i. And this is another name. It's an ad tech company that's positioned around consumer engagement, but a huge portion of the revenue growth is levered to artificial intelligence and using tools.
Matt missed the stock. Which one are you talking about?
Apple3i.
Apple. Okay, got it. Yeah, please go ahead.
Yeah, so I like their integration of artificial intelligence into what they're doing. And given that they're an ad tech-led company, they do have an incredibly strong tech stack platform that I think is far and better than what a lot of other competitors offer. So I think it's not loved by the analyst community because it's expensive, but revenue growth has been there. Margins have been very, very strong. And I think that's another name that can surprise to the upside that's levered to these longer-term growth themes that we've been talking about.
All right, Matt, thanks very much for joining us. You'll find those themes, those AI, the tail, and many of these themes actually, and some are up front as well. Looking at something like a GE Vernova. I mean, stock's done phenomenally well. It's up 10x in the last 3-4 years, but trades at some 100 times earnings. And but it's a play on the infra build out for AI data centers, etc. And they are a supplier to OpenAI globally. And of course, I mean, it's showed up here as well. Thanks very much for joining us, and good talking to you.